Hello, this is Mike again with the NetPicks Options Academy. This is the weekend recap video for Saturday, November 14. So if we take a look at the market as a whole, we finally started to get that pullback that we've been desperately looking for here the last few weeks. Wednesday, Thursday, and Friday, some pretty nasty looking candles to the downside. So that does a couple of things for us. Number one, if we go back in time, we had been talking in previous videos about this 6-week uptrend that we've been in pretty much on every market that we look at. This is just a simple daily chart of SPY. So we got that big uptrend in place, and if we go back into last weekend's video and Wednesday's video, we had been talking about this big cluster of moving averages right around the 206.50 level. It happened to be the 200 period simple moving average along with the 20 period simple and exponential moving averages. So those are all key levels of support that early in the week, as we went into Monday and Tuesday, those levels all had held a couple of times. Okay, we got into Thursday and Friday, and the market just finally gave it up on the downside. Now, you're gonna log in this weekend, and you're gonna see posts being made or videos being made about some ugliness that could potentially be coming. Keep in mind, in the grand scheme of things, this is a healthy pullback. Okay, we saw 6 weeks of gains to the upside without any type of a pause. Okay, so are we breaking some key support levels? Yes. Is it time to panic? Absolutely not. Okay, look at the volume on the last 3 sessions. Look at how the volume has started to expand. That's great to see. Okay, that's just going to make it so much easier for us to trade here in the coming weeks. It'll just make it easier for us to get in and out at good prices. Okay, we also saw volatility spike up. If we take a quick peek at the VIX, notice we did close the week up above 20. Okay. Now you're going to turn on CNBC next week and they're going to talk about that being concerning. That's great to see. That's going to really open up our playbook over the next few weeks. We're going to have the ability to sell some premium. Okay, we could potentially put on some iron condors and some short put spreads, for example, heading into December. That'd be good to see, because we know the closer we get to the end of the year, when we get into Christmas and New Year's, the markets tend to slow down. Okay, so if we can sell some premium now over the next week or two, that could potentially set us up really, really nicely for some year-end profits. Okay, if we go back over to the overview charts, what am I looking for heading into next week? Well, our next area of support is that 50-period simple moving average. Okay, that's at 200.82. That's the next area of support below us. Any type of resistance above us really starts out right at the moving averages that were just broken. So if we do start to recover next week and do get a bounce, that 206.50 level, again on the upside. Okay, that'll be the first area that we want to watch. Now, heading into next week, we can expect a pretty good gap to the downside first thing Monday morning. Okay, it was terrible to see Friday evening with the attacks over in France. So political views to the side, what does that do for us heading into Monday morning? Well, we have some fear coming back into the markets. We're probably going to see a gap down. The big test is going to be what's going to happen in that first half hour of trade on Monday. When we get over to the individual charts in just a second, the gap down would actually help us. We've got a lot of short trades on that are in nice profits. We're just looking for one more push lower. So we could potentially be managing those trades pretty quickly on Monday morning. And like we talked about in earlier videos, that's always a good feeling when you start to lock in profits on a Monday. Just get your week off to a great start. So that's what I'll be watching for. Monday's open is going to be very, very important. I want to see how the markets react worldwide to the attacks from Friday evening. If we take a look at the Dow and the S&P are very much in sync with each other right now. They're very, very similar looking charts. We're sitting right on top of a big support level, right on 172.60, 172.50 on the Dow ETF. We should break that Monday morning with a gap to the downside. So the next area of support below us, 169.83. Up above us, all the moving averages that were just broke, right around 175, 176. Those will be areas of resistance to watch should we rally up. Now, keep this in mind. I know there were the attacks that, have a lot of people scared here this weekend and wondering what the market's going to do. Keep in mind, the market tends to do what everybody least expects. So it wouldn't surprise me at all if we get a gap down Monday morning and then the market rallies from there. We've seen it so many times in the past. So we'll have to watch out for that as well. The NASDAQ, Definitely the index that has the most areas of support below us. I mean, you can see a whole cluster of moving averages here between 109.80 all the way down to 107. So we'll see, depending on what we get Monday morning, we'll see how the market reacts to some of those support levels. Again, volume expanding, volatility expanding, all good things to see heading into next week. So let's get over to some of the individual charts, walk you through some of the trades that we were tracking. We talked about these in the video on Wednesday. Here's a chart of SPY. You'll notice that we did close out of this trade. This was on Thursday into Friday. We saw the move to the downside. Notice we initially triggered into this short trade right around the 207.40 level. We talked about a couple different ways of taking it in our training room. We talked about buying long puts. If you want to be more conservative, taking a put spread. It didn't matter to me. It all just depended on how much risk you wanted and how much aggressiveness did you want to use on these trades. So I put on the December 210 put, bought it for just under $600 a contract, sold it out, booked a $310 profit. That was a 53% return. I was in and out in about 4 or 5 days. Okay, so really nice trade. Now the issue with this, I had a lot of newer students that this was the first trade that they've ever taken with our system. We got into it and almost immediately we were pulling back. We were underwater. That's just, it's part of trading. I mean, you're going to see very few instances where you trigger into a trade on a swing trading basis and it zooms right to target without pausing or taking heat at all. So it's so crucial to stay patient. Now, patience paid off in a big way here. That was just a big profitable trade, because what I was teaching my students here over the past couple of weeks, I mentioned I'm going to lighten up on my position size. I'm going to be more conservative on the upside. If we get the market to roll over, if we do get some short trades, I was going to ramp up position size. I was going to take more long puts. Okay, and that's exactly what I did here with SPY. So it was a pretty decent sized winner. One of my bigger wins here as far as dollar-wise goes over the past number of weeks, because this is by far the biggest position size that I had taken in weeks. Okay, and on this move to the upside, we were booking some really great profits on the move to the upside. They were just small winners. I was cutting back on position size as we went. Okay, so now we have this new short setting up. This set up right at the end of the day on Friday. I had an entry point at 202.38. We didn't quite trigger in. Now here's the tricky part. If we do get that gap down on Monday morning, like I mentioned, because of the attacks in France, we'll potentially miss this trade. Because if we gap down below the entry point, I'm not going to chase the trade at that point. Okay, so I'll be watching Monday's open very closely to see what we do end up getting. Okay, so really nice profit there, locked in on SPY. QQQ, the other index ETF that I personally trade. Here's a chart of the trade that we have going. We just hit first target on Friday afternoon. So I mentioned over on the overview charts, on those daily charts, I mentioned QQQ has been a little bit stronger. It's actually held in there a little bit better than the S&P or the Dow. So you can see that based on this chart right here. I mean, the S&P were closing out of a full winner. The QQQs were only at first target. So a gap down Monday morning would actually help us. Our full target's down at 108.65. Our stop has been moved to break even at this point. So the risk is off. That's a good position to be in. So this is one of those trades that I'll watch first thing Monday to see if we can book a nice profit. Again, I'm in December long puts. Okay, I'm not going to mess with November options here because we've only got 1 week left. Next week is expiration week. Okay, I just didn't want to mess with the time decay that's there in expiration week. I wasn't expecting, terrorist attacks here Friday afternoon. So I was anticipating the market getting a little bit slow heading into next week. But, regardless, we decide to play it a little bit safer. Are we still going to book a profit? Absolutely. It's not going to be as big of a percentage return as we would have seen had we played the weekly options. But no complaints out of me. It will be a nice winner most likely Monday morning. Apple, notice how a lot of these charts look very similar. I mean, this looks very similar to what we saw over on the NASDAQ, right? I mean, we're about to hit first target. Okay, if we get any type of a gap down Monday morning, we could be managing this trade first thing. Full target down at 110.21. The full stop is up at 117.98. So here again, I've got December long puts on the table. I get a lot of questions, why do you only buy premium? Well, that's not the case at all. I just react to current conditions. when a lot of these trades were triggering in, okay, the markets were, going back to early last week, we were in a very low volatility environment. Okay, the VIX early in the week was down in the 13 to 14 range. That means options are very, very cheap. If you sell premium, okay, you're not going to be able to collect very much. It's hard to get a good reward to risk ratio. So when we get in periods of low volatility, I lean more towards being purely directional, buying long calls, long puts, buying long vertical spreads, because those are going to be the trades that are going to benefit from volatility expanding. So on this trade right here with a long put, not only are we getting a directional move to the downside, which is going to help us profit, we're also getting volatility to expand. It's like throwing gasoline on the fire. Okay, what happens when you have a fire and you throw gasoline on it? Explodes, right? When we buy a long put, if you get a directional move to the downside and a volatility increase, that's when you get those explosive big returns very quickly. Okay, so that's exactly why I'm buying premium. Now, if I go over to the Market Watch tab, we talk about this with our students all the time. These are the list of products that we look at pretty much on a daily basis. And I have all of the volatility percentiles loaded up. Anything above 50, and I'm willing to sell premium. Last week, at the beginning of the week, we only had 3 or 4 names that had volatility levels above 50, or IV percentiles. Look at this list now. Now we've got, a quarter of our list, maybe a third of our list. So that's great to see. So as long as I get volatility to pop here over the next couple weeks, you're going to hear me talk about selling more premium, selling more call spreads or put spreads, or putting on iron condors, because now we have the volatility to back that up. So as part of the Options Academy, we do not just teach one side of the trade. Okay, we're not the instructors that are going to say, only sell premium. I don't believe in that. I believe you should let the market dictate what you do. Let current conditions dictate what type of strategy you want to play. If volatility is low and you're expecting volatility to expand, you're going to get the most bang for your buck by buying options. If volatility is expensive, if it gets high, then I'm willing to sell premium. Then you're going to increase your odds of success long term. Would I much rather sell premium? Sure, because we're going to give ourselves more ways of being profitable. But we have to make sure our strategies line up with our personal outlook for the market. And we also have to make sure that it matches up with our risk tolerance. Okay, so I don't believe it's the right method to just force feed one specific approach in all conditions. I like to be flexible. I mean, options are extremely flexible products. I'd like to take advantage of that. Okay, so I'll be watching this list very, very closely next week. I mean, look at all these names in the 40s and upper 30s. If we get any type of a gap to the downside Monday morning, like we're expecting, we could definitely see this list expand even more, which is going to really open up our playbook next week. We should be very, very active here next week. So getting back to the charts, Apple, we'll see if we can get a move to the downside, hit that full target on Monday morning. Let's talk about some of the global ETFs. I mean, with these attacks, over in France, I mean, some of these global markets could definitely be active. Okay, now the global ETFs that I personally trade right now are EEM, the Emerging Markets ETF, and EWZ, the Brazil ETF. Here's EEM. Here's another one. We've got this short trade on. Our full target's down at 33.17. We now have a trailing stop in place. Okay, so we've moved that stop down. As we go closer to that second target, we're going to start to lock in profit along the way. So any type of a move to the downside Monday morning, and we're booking profit there on EEM also. What about, since we're talking about global markets, let's talk about Alibaba. Okay, we came very, very close to the full target here Friday afternoon, within pennies. So what I told my students, when you start to get 95% of the way to the full target, if you get into a Friday afternoon, would I close this out? I would highly consider closing that out, because what we don't know is anything can happen over the weekend. Okay, you never know when a terrorist attack is going to come. You never know when the central bank is going to come out with a statement that could lead to a big move Monday morning. So if you wanted to say, you know what, I've booked 95+% of the full target here, let's just close it out, I can't argue with that at all. I mean, that's probably the smart thing to do. If you were still in this trade, we've got our full target down at 75.39. So any type of a move to the downside, you've got to manage this trade right off the bat. I mean, we're not gonna let this one turn all the way back on us and give back all that profit. So we've got a really nice trade going there. Tesla. We also triggered into a trade Friday. So we've got our work cut out for us in this one. I mean, we need to move all the way down to 196.63. That's our full target. The stop up at 222.96. This is one that I definitely wanted to go out to the December monthly options. The reason for that, if the market's a little overdone in the near term on the downside, we're probably going to have to, survive some type of a consolidation or some type of a bounce over the next week or so. So I want to have more time on my side here. So we'll see what plays out early in the week. First couple days in the week should be pretty telling on Tesla to see if we do get some follow through or not. What about some of the energy products? Here's XLE. We've had a pretty darn good stretch here in XLE. The last two trades, full winners. We close out of this full winning short trade on Thursday. Couple unique things on XLE. Number one, it's typically a slower moving market. It just takes more time for this one to develop. And once I'm in a trade, it typically takes longer for us to hit targets. So we triggered into this trade and almost immediately we're seeing a pullback. We're almost immediately underwater. Okay, patience here again pays off because we survived the chop. We hadn't hit a stop yet. We hadn't hit a target yet. So we stayed patient and we saw a nice move to the downside on Thursday. Because of the Veterans Day holiday last week, the crude oil inventory report, which typically is out Wednesday at 10:30, they pushed it back until Thursday at 11. So that definitely helped with this move to the downside. We then got another re-entry trade. The entry point here was at 65.83. That one did also trigger in Friday morning. So, oil has definitely gotten beat up. I mean, the last week or so, look at the crude oil futures. That's /CL over here. We're threatening that 40 level again. I mean, we could definitely get down to new lows for the year very, very quickly. It's been a nasty stretch for oil names. So, we'll see. We've got targets in place on this. 64.76 and 63.41 are the targets. Stop up at 67.78. So that's another one that I will track into next week. Are we perfect on the week? No, we had some losers. We gave Netflix a shot on the upside. We had a long trade on here. Remember what I said at the beginning of the video. On any long trades, I was being more conservative. I was trading smaller position size. I was trading more vertical spread. So I had a small long call spread on here on Netflix. It did not work out. We flipped around. Okay, we triggered into a short. Okay, now the important part here is, was I being stubborn there when I hit the stop? Was I saying, you know what, I want to hold on a little bit longer. I don't want to take a loss. No, I'm taking off my trade. I'm reacting to the system. Stop was hit. I respect that level. I keep my small loss, or my loss small, and then I'm going to enter a new short trade there. So once we triggered into the short, okay, this was on Thursday. So I took my loss, took on a new short trade, and look at what happened. Lo and behold, come Friday afternoon, right into the close, we saw the nasty sell-off into the close. We closed near the lows of the day, and full target was hit on Netflix. So the couple things here. The long trade did not work out. It was a smaller trade. It was a loser. Okay, the short trade made up for that and then some, because what I did there is I put on a larger position size, staying consistent with my approach that I talked about earlier. And because my winners are larger than my losers, in the end, I was able to book a profitable week. Now, the problem there is, what if you're a trader that says, all right, I stopped out of the long trade. I don't want to take another trade right away. I want to just kind of take it easy and let things consolidate a bit. Well, had you missed the short trade, that's a pretty nasty position to be in heading into the weekend. You booked the loss, you missed on the winner, so it's important to take trades as they come. Doesn't mean you have to jump in with both feet and take full 100% risk on every trade. You can cut back like I've done, just based on my personal opinion of the markets, but it's important to stay in sync with the system. And that paid off in a big, big way. So did we have some losers last week? Yeah, we did. I just showed you one of them on Netflix. But in the end, because our winners are larger than our losers, because we're winning more than we're losing, you're okay in the long run. Here's TLT. Okay, here's another one where we had to hold. This one triggered in last week. No surprise with equities moving to the upside. Bonds have gotten hit a little bit, especially with some of the news that's come out of the Fed. So we triggered into this short trade. This was back on the 3rd. We did hit full target on the 6th, so that was another full winner to the downside. Okay, so it's just been a phenomenal stretch. We haven't even talked about financials, and I'm running out of time here. Let's just quickly take a look at Citigroup. Okay, here's Citigroup. We had coming off of a full winner on the long side last week. We did trigger into a short trade that did hit first target Friday afternoon. Now, financials were actually hanging in there decently last week. So we only hit first target on this. The stop has gone to break even. Stops at 54.23, target at 52.36. So any type of a move to the downside Monday morning, we're locking in profit here on Citigroup also. And we'll wrap it up here with Goldman Sachs. I have a ton of other charts that we could look at. We're just not going to have time in this video. So Goldman Sachs, here's another one. Did the long trade work out? No, it didn't. We took a loss on it. It was a smaller loss because notice what happened. We had that short trade set up. The entry point on the short trade was actually above the stop on the long trade. So we reduced a little bit of risk on the long trade. We triggered into a short. So we took the loss. Never fun, but the market was rolling over. We had to respect those levels. The short trade made some nice progress down on Friday. We hit first target. So worst case on Monday morning, my stop's at break even. My full target's down at 188.76, and we'll see. So you can see Monday morning could potentially be a very, very busy morning for us. We've got a lot of potential trades that are in progress, that are at very key profit levels. So we'll want to watch these closely. If I zoom out, I get the questions all the time, how many symbols do you look at? This is a big portion of my watch list right here. This is 20 of the 26 names that I trade. Okay, so I'm not just floating around showing you all the winners. These are the names that I trade on a daily basis. Okay, so it's just been a hugely profitable week. We did have a trade of the week from a couple weeks ago. I'll wrap it up here with this one. Not going to walk through the details of how to take this trade because we're running out of time, but we had this iron condor on from weeks ago. Out in the November options, we sold the November 32-33 call spread, which is essentially trading for nothing at this point. We've booked all the profit on that one. And we sold the 29-28 put spread. And we did this for 54 cents. It's now trading for 24 cents. So we've got $30 of profit per iron condor. We're heading into expiration week, so we're going to have to act on this one quickly early next week. And what I've been telling my students, I'm looking to close this one out for between 15 and 20 cents. So if we get a couple more days of time decay to add up there, we should be able to close this one out with a great profit also. So again, this was a trade of the week from back in October. It was weeks ago when we put this trade on, and we've let it work. We've let all the time decay add up. So is this an aggressive directional trade? No. This is one of our trades that we put on because volatility was high in some of the energy products, and we wanted to put on more of a market neutral trade instead of being super aggressive on a directional basis. So it's always great when your directional trades are working, your volatility plays like this iron condor, those are working. It's been a great stretch here in the overall market. So I don't expect that to change. I think we've got about a month window here. From now until just before Christmas, I think it should be pretty darn active. So it's a great time to be involved in the markets, and we'll see if we can continue to book some profits here heading into the next couple of weeks. So I'm going to wrap this video up here. I'll be back midweek next week for the next update video. If you have any questions at all, as always, feel free to contact me. My direct email is mike@netpicks.com. All right, so I will talk to you guys on Wednesday. Enjoy the rest of your weekend.